Theta, or is it Theta? Who cares? Today we're going to look at the technical chart pattern, the psychology of the markets, great buying or selling opportunities. What is the market looking like in terms of mass psychology? Because we use high-level Elliott Wave theory and Fibonacci, which really tells us how the market is contracting and expanding based on herd mentality, a global herd mentality, because crypto is a global market. So if you like today's video, hit the like button, subscribe, hit the bell notification, help me get to 1,000 subscribers. I think we're above 300 now, so it's moving nicely. 305 weeks, it's not bad, but let's even get 1,000 within June. I would love you for it. Now, if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years. I think it was just after I became a math teacher. After my math teaching days, I became a trader. And in 2008, I got featured in the best-selling book, High Probability Trading Strategies. Phenomenal book, and we use some of that knowledge today. Now, because we use a lot of Elliott Wave theory, if you're brand new to it, take my crypto trading masterclass. I cover one of my 3 secrets, which is the first secret, which is how to project forward into the future what's likely to occur. And Elliott Wave theory is basically the theory of Rouse Nelson Elliott. In the late 1800s, mid 1900s, he did a lot of research and he figured out some stuff, how Fibonacci applies to the psychology of the markets and how the markets they come out and they predict themselves in waves, in identifiable patterns. And 50 to 70% of the time, those patterns are very clear. So today we're going to dive into Theta. I'm going to stick with Theta. I've heard people call it Theta. Other people call it something else. I'm going to call it Theta. Theta, Theta, Theta. All right, let's dive in. So let's look at this chart pattern. Okay, macro picture first. Macro picture, meaning we're just looking at it on a real big level. What is the wave count? The wave count, to me, looks like we had a nice move up. Boom. No question of a doubt that this is a wave 1, right? Very, very obvious. Now we had this big move down in 3 waves, A, B, C, but we're not going to intermediate yet. We're just going to focus on the macro. So now, what's the macro picture? We're looking at a wave 2. And I'm going to put a question mark next to it. Why? Well, because to confirm the absolute confirmation of a wave 2, and we don't want to wait for this in terms of trading it because we would miss out on a lot of profits, but it's to exceed this wave 1. So now we're going to go into the intermediate. So we're going to go down to looking at, okay, this is a wave 1. Yeah, great. Let me just make that really clear for you. Because once you get your head around this, because everything is difficult before it's easy, but once you repeat a few times, then all of a sudden it becomes easy. So we're looking at this macro picture of wave 1, right? Boom, or boom, right? But then we're going to go into a lesser degree of, are there waves within this macro wave? Well, here we can see a wave 1, 2, what looks like a nice wave 3, a wave 4, and a wave 5, right? That's pretty clear. Pretty clear. When it unfolds like this, we don't need to get too analytical. We just want to get valuable information that helps us. Just make sure it's on the intermediate. It is great. And then we also want to look at the intermediate count on this. Again, it's really, really clear. So we don't even need to. And by the way, I'm using closing day data on a line chart because it makes life cleaner and clearer. And when you're looking at the macro and the intermediate on a higher time frame, actually it's best practice to do it on a line chart because the candlesticks can be quite wide. Like if I just quickly jump into a candlestick, you'll see it's noisy, right? You see the noise? It's not as clean, especially when you got wide days like this, kind of confuses the matter a little bit. Whereas if we just keep it nice and clean to really get the psychology of the market as accurately as we can, we can go to closing there. And just if you don't know, you use this line chart here, and if you double click on the line, and the thing you want is where it says price source, you want to have it closed because you have it open, high, low, but you want to have it closing day data. So let's just now do the A, B, C. Right, nice and clean. It's like this is textbook stuff here. Textbook. Let's just get rid of the wave. Still intermediate. So now we've got the intermediate counts. We've got a nice wave 1, a wave 2, and then the wave 1's got 1, 2, 3, 4, 5, and then an A, B, C. So this is like, even if you can just do this one bit, because if you take my crypto trading masterclass, I cover the theory of this, but now this is the real life action, because this is going to give us valuable information on what kind of Fibonacci ratios we should be applying to see if there's buying opportunities, selling opportunities, and so on and so forth. So again, 1, 2, 3, 4, 5, A, B, C over 2. right? And now we're going to a lesser degree picture. So now, where are we now in the market, right? Well, we're actually in this phase, right? So let's keep it, because this is where most people get confused because you don't know what you're looking at. Some people are still looking down here. I go, that's irrelevant right now. You know, some people are looking up here, and I go, well, that's kind of irrelevant now also. Right now, the action is down here. So we need to focus here now, right? We need to focus what's happening right now. Well, if there's a wave 2, our anticipation, and if this is a wave 2 low and it holds, so this is the wave 2, and we're gonna make, look, trading is a business. I've got that as one of my quotes. It's a simple quote. I think I just said it the other day. I wrote it down. I know it says it somewhere. Anyway, I've written all these quotes down. Yeah, I like having quotes and I like having them handy. But trading is a business, and every business on the planet, you have to make decisions. And it's a business, right? So we have to make decisions. And I found over time, the thing that people hate the most doing, whether it's a job, in a job, or whether it's in their own business, or whether it's in life, just in their social life, is making decisions. So we need to have an opinion of the market based on what we're seeing. And that opinion may be wrong. So we don't want to have a fixed opinion. We want to have a moldable opinion. But as the market tells us right now, it looks like we've made this nice wave 1 or wave 2. That's our opinion of the market. What typically unfolds after a wave 2 is a wave 3, right? Which is this kind of movement, right? So we can actually project that forward in time with a bit of price analysis, which is the most typical wave 3 price target. Is if we take this low down here, the beginning of this wave 1 down here, this high of this wave 1, and then project it forward from this wave 2, and this normally pops up. We click the cog, and the numbers, the absolute minimum from a corrective standpoint is 100%. Before wave 3, we're actually anticipating 1.618, and then an extended wave 3 is 2.618. So with Theta, what we're anticipating is the market potentially going to $27, $28. $27, $28. What is it today? Today's around $9. So what's that? A 3x, right? 3x from where it is today. But now let's just do one last thing. So let's just go back on the macro picture, wave 3, right? So if this was if we just drew it as a straight line, this is wave 1, wave 2, and wave 3, then we want to go into the intermediate, which is a wave 1 then a 2, then a 3, then a 4, then a 5 of a wave 3. So then we want to zoom in to say, what's the micro here? Is there a micro clear picture? So today, let's just quickly double check. What's the momentum? Momentum is bullish on the fast line and then bearish over here. So what I'm seeing over here, if we just stick on the daily data, is we don't know if, is this the low or is this the low? I think it's a bit cleaner if we say this is the low here, right? But on the micro data, we've got this A, B, C, and now we've got this new wave 1. Sorry, not the micro, the intermediate data, this wave 1 forming. We've got the micro of the wave 1. Let's do two things. Let's quickly do a micro of the wave C first, right? There's a few kind of counts we can do, but it kind of looks like 1, 2, potential 3, 4, 5. And then we just make sure we got it on the micro. Bang. Just want to make it really, really clean and clear. Because this is, you want to take the time to do this properly. It's formed as a double bottom. Oh, it looks like a double bottom. 3 over C over 2, right? And then using the same degree of counts, it looks like a nice 1, 2, 3, ABC over 4, and it looks like we're forming a 5, right? 5. So last thing we're going to do, if this is the case, we're going to be mindful that one of the Elliott wave rules is that wave 4, this wave 4 down here, this wave 4 down here should not cross and close in the closing range of the wave 1. If it does, it invalidates the count, and it is really close. Now sometimes you have to make a business decision, because if it goes by a couple of pennies into the range or a couple of cents into the range, you have to be, you have to make a decision. But this is the classic, where the resistance becomes a support. So what we can project now is I'm going to do two things for you. This is going to be powerful for you. If you've got theta, or if you're looking to enter theta, is a wave 5 projection. The two most important ratios is the minimum maximum wave 5 zones, which is where we measure the low of wave 1, the high of wave 3, project it from wave 4, and it gives us 62 to 100% of that range. That's the typical. And then how to confirm which one's more likely. They might both be likely, but you do an external retracement, and the two numbers we're looking for is 101.272 and then 1.618. But you'll see that is much closer to this spot, right? And then on a lesser degree time frame, like on an hourly chart, we can see if this breaks down to 5 waves. So here would be the high probability kind of zone for a wave 5 of a wave 1 of a wave 3. And then last but not least, what I would personally wait for with theta is going to be, if this unfolds this way, similar to Kusama, similar to what we said with Kusama not that long ago, a nice A, B, C. Right, so what I'll do is I'm going to put in a typical, I'm going to put in a price alert, and I'll get an email to say look for long trade on ABC of 2 of 3 of 3. So that just gives me an idea on and just so you know, the way I would normally write it is wave W, and we want to go, it's going to be a wave C of a wave C of a wave 2 of a wave 3 of a wave 3. Right, but the main thing is, you'll see there's a yellow line up here. Yep, bump. That's my notification. I'll get an email if and when that price hits. And if the pattern unfolds like this, then we'll go beautiful. We'll look to see if there's a buying opportunity at this stage. Right now, you know, unless you're a short-term trader and you want to get some profits in this move, I look for the big swings because what I want to be doing is looking for this wave 3 or potential 3. And that's the most aggressive, impulsive wave where we should see some really aggressive moves from this point here. So there you have it. Theta is looking healthy. If it turns out this way, there's going to be some really good profits that we can make. But right now, I think the best thing is to sit on your hands. If you hold theta, again, now you got a bit more of a clearer market. If you're looking to get in, then you also got a clearer picture on when will be the high probability setup, so we can get the maximum upside and minimum downside. So today, let's finish off with a quote from my book. Let's have a look. Let's see if there's one that I haven't read yet. I don't know if I've gone through all of them now. I think we did that one not that long ago. Oh, we did that one also. Have I gone through all of them? Oh, here we go. My good friend Bruce Lee. A wise man can learn more from a foolish question than a fool can learn from a wise answer. A wise man can learn more from a foolish question than a fool can learn from a wise answer. Bruce Lee. See you soon.